So for us in the U.S., when it comes to Africa, we have to understand, that Africa is not one country. It is 54 markets, 54 country. And quite frankly, it's not to insult no one's intelligence. But let's be blunt. One of the biggest mistakes Americans make when thinking about Africa is assuming that it's one big country, right? But it's not. It's not. I think Africa is made up of 54 countries, each with its own government, language, culture, currency, and market demand. That means 54 different opportunity for trade, innovation, collaboration, and growth. So let's break the myth. Couple things, few things. Well, not all of Africa speak the same language, right? Some countries are Anglophone and Francophone. Others are Francophone. Um, some, I believe, just multilingual. Second, not all countries are at the same stage, right? So if you look at Kenya, for example, Kenya has a huge tech ecosystem. It's not the same as the Democratic Republic of Congo mining economy where I'm from, or Senegal, fashion or creative sector. So every country is different. In the Congo where I'm from, I mean, we are the most mineral rich country on the planet. And oftentimes we do focus on the mining sectors and also don't realize that we have to diversify other sectors and so on. But I mean, the point that I'm making that every country is different. And also not all government operate the same way, right? These are the things, so, when you said political instability across Africa, corruption, it's a global thing. It's not a African thing, it's a global thing. So we have to kind of shift the mindset. But if we look at, for example, Ghana, political stability and pro-business is such a business-friendly environment. So I think these are the things that we have to talk about, realize that, you know, there are countries across Africa that are a business-friendly environment, right? I just said like Ghana, political stability and pro-business climate, you know, offer different from other states, you know, you can navigate easily. So basically, think about this. The analogy is this. Would you treat Europe like one country? Imagine telling an investors, we are expanding into Europe. What that's saying, if you mean Germany, Greece, Ukraine, you get the grift. That sounds silly, right? Now apply that to Africa. Folks, I'm just saying it's a mindset that we have to shift, right? Because I mean, as Americans, how we are. The reality, I mean, look, I'm not going to sit here and say that there's no challenging across Africa, you know, make it a perfect, but and things are complex across Africa, but complexity creates opportunity. It's a mindset. So yes, Africa is complex, right? But so is America. So is the United States. The U.S. itself, it's a mix of what, 50 states, each with unique laws and taxes, um, political learning and economies. I mean, I live in the South for 2 years in Nashville, Tennessee, quite different from up here on the East Coast in Boston. So the difference is Americans, we are trained to navigate U.S. complexity, but we don't yet have a framework for understanding Africa, regional diversity, you know. So here's the key, right? I think across Africa as a continent, relationship matter even more than regulation. That's one insight to know. If you're going out there, doing business, and the reality, yeah, if you're out there doing business, I think who's this? Sorry. Oh, please don't tell me I have to go to commercial again. Yeah, sorry about that. Hold on 1 second. All right, anyway, it was a quick commercial. We back, folks. We back. Um, what I was saying that in terms of yeah, in Africa, it's all about relationship that matter even more than regulation. So before you talk numbers across Africa, you need to talk face to face. Before you pitch or pitch deck or PowerPoint presentation, I think you need to build trust. That's why, U.S. businesses, we need people, someone who understand both sides of the bridge. That's why people like me comes in, you know, as an American consultant, a U.S. Economy bridge relation, U.S. Africa economy advisor, right? So we come in and understanding that language is a market barrier and also a bridge at the same time. I mean, for Francophone African country like Congo, Cote d'Ivoire, Senegal, and I'm Francophone. I do speak French. I mean, I'm also trilingual. I migrated here from the Democratic Republic of Congo to Boston in 1994, not five, I believe. Also grew up in Gabon, and I'm very familiar with Francophone markets. I think we have to look at, listen, language is the number one barrier to accessing to U.S. market. We understand that. That's why I think most Americans and most investors, American investor, you speak English, right? Contract, regulation, tax code, it's English. Networking events, investors conferences, U.S. pitch competitions in English. So let's we know this thing. So that means to francophone entrepreneur and African government trying to expand uh, to the U.S. leveraging English, you know, it's critical. It's a must have. So I think we just have to also understand opportunity for just education, man. We have to look at U.S. Educator University, all these online platforms. The world is global, remote now to help us close the gap and continue to create bilingual training, pitch, boot camp, and translation ready investment deck. So let's not overlook language. And that's something that we know very well that you can't overlook language, right? Um, because it's just a reality. And also the fact that, you can't overlook language and the reality for us, most US investors don't really engage. We don't really engage like that with Africa. I think we mainly focus, Europe and Asia. I mean, you know, I feel like we're not even patient. But let's get honest. I'm saying American investor, we often hesitate to enter African market. And we have our own reason. The list is long. Why? I mean, it's too complicated. We said there are too many countries. Where do I start? It's too risky. And um, is money safe there? We have our own list, right? Oh, it's too unfamiliar. I don't understand the culture, regulation, the currency issue, every country. So what happened is we sit on the sideline. Meanwhile, the world is going to Africa. China built road and railways. Turkey's open factory. India open call center. Russia form mining partnership. The list goes on and goes on. So what's up with us, right? Americans, we stay home. But there's the cost, though. I think by the time, we try to be ready to engage, the best opportunity already gone and too expensive to enter. That's why I think when it comes to Africa, the return of investment, if you're an early mover, you know, I think it's the cost, man. It's too late. It's going to be expensive. I think that's why understanding Africa, 54 countries, landscape, it's not just a nice, study lesson. I think it's a competitive edge. I do believe that Africa is still the U.S. advantage, untapped advantage, right? Sorry, I'm multitasking in between here. Reading some emails. Yeah. So, you know, for us, the U.S. private sector and the VC, we just need strategy towards Africa that really focus on return of investment, that are realistic, and yeah, that are return of investment driven. If I'm not repeating myself, because at the end of the day, and look, the bottom line, man, Africa present huge business opportunity, but many of the challenges are what a lot of expert call, I don't know if you heard of the word wicked problems. Basically, they're not just technical issues. They are deep related problem tied to culture, politic, power, and formal systems, and many of these challenges exist basically, listen, by design, benefiting middleman groups, right? A gatekeeper, basically trying to disrupt with, I guess, focused on tech alone in Africa often fails. So you have to understand what are those problems, wicked problems, as I believe, as I mentioned earlier. Basically, wicked problems are difficult to solve because they are connected to many other issues, like land, politics, and culture. Because in Africa, there's a lot of factors that you have to be aware about. You know, a lot of this wicked problem is like there's a system. There's no clear. It's kind of like they have one size fits all solution. They change as you're trying to fix them. It's very complex and involve many people who see the problem differently. So it's like a wicked problem. It's like a system. It's not something that you have to, sort of be concerned about. One example could be you might want to fix, let's say, agriculture with tech, and we understand 60% of and use arable land are in Africa, right? We have so much land, and we also import too much. But let's go back into the example. Let's say you might want to fix agriculture with tech, but that's tied to land rights, local custom, poor infrastructure. So it's not so much about the land, it's about the people too, because the people also wants to benefit. A lot of investors, when they get to these land across Africa, agriculture, it's a lot that's involved around that. So that's what I mean, that we have to understand a lot of this factor that are tied to what we call wicked problem. So you can't just build an app and expect results. So I think wicked problem, like we said, they a lot of factors. They're just messy, they're complicated, they're deeply human. It's like, and they require smart, patient, cultural aware solution, not a quick fix. And you have to understand, if you're going to tell me it's complicated, it's hard. I just mentioned early countries, the world is doing business over there in China, Turkey, the world. So what does it mean for us as American investors? The VC sector. What does it mean when it comes to Africa? So if I'm mentioning all this is to say that, you know, some insight that I can provide is to say, look, we know for us, tech is a powerful, but it's not magic. It can't fix, you know, social structure. You need that human touch, localization. Tech cannot fix, corruption, or survival driven system. You need understand who are the gatekeeper, who are the informal actor, who are the middleman, because they're the one who understand locally how the system work. As much as messy it is, but it is part of the opportunity. You know, we have our own VC business model. Western VC model. We focus on fast growth and short-term return of investment. We sell a 3 month, 6 month project, and I get it, but it don't fix things over there. So I think the sort of kind of analysis will be, understanding that locally African entrepreneur are solving African problem, right? They understand they understand they understand often, that they tackle the big messy problem tied to power. So the VC sector, we expect in fast return, we struggle in environment, and where trust and local relationship are overlooked because we want things fast. So in Africa, you got to work with these African entrepreneurs because they tackle big, messy problem. It's about trusting, local relationship matter than speed. You cannot ignore informal system, because if you ignore, it's going to lead you to fail project and miss return of investment. So you got to really understand how this whole thing works. I think the solution, you have to invest in real asset. Go beyond the app. That's what I mean. Support logistic, infrastructure, physical operation, solve local problem, create a marketing brand visible campaign, have a local presence. Yeah, you can work with the team locally who are Africans on the ground to understand the concept, hire a local consultant, engage with the informal network. I really understand, the network, whether you're trying to penetrate Nigeria, Senegal, those mega city, engage in a formal network, work with them. Oh, don't work against them, but understand how they exist, work within them, even if they're messy. The world is messy, doing business is messy. When it comes to Africa, you have to think long term. The return of investment in Africa takes time, but it can be much more sustainable when it's done right. All right. So until next time, stay composed, stay inspired, for you being consciously exposed.